All right, hey everyone, Mark here, Mark P Markets. Thanks for joining me for another Greenbridge Investing Market Analysis. Thanks for coming here. Hold on, I'm adjusting my microphone. On this Thursday, it's good to see you all. I see a bunch of questions. If you're new to my stream, please share your symbol or your market that you'd like me to analyze in the chat now. So when I get to the text portion of the chat, I can go over your questions. Also, if you can, please put one symbol per question. I know some people ask for multiple symbols, but I want to be able to answer as many questions as possible. So if you can, put your questions, put each symbol in a separate question, something like that, so it allows me to get through more. I had a guy in our free chat room give me like a whole bookload of symbols asking me for, so I'm going to try to get through those throughout the stream. I'm not going to answer them all in one sitting there because I have a lot of other questions to answer. Anyway, all right, everyone, thanks for joining me. Let's get this thing started. All right, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Let me say hello to a few people. We have DJ. I saw DJ in there. Good to see you. We got Wedge. We got X. We got David. Eligius. I don't know if I pronounce it. He says I'm not pronouncing the name right, so he wants me to call him Al, but I think I got that. Eligius. Okay, anyway. So thanks all for joining on this Thursday afternoon. If you'd like to share what country you're from or what city, that's always an interesting, fun fact. I'm streaming from the greater New York City area, northern New Jersey, and that explains my accent. All right, so first things first. Let's talk about Bitcoin. Now, DJ points out he likes my title. Well, yeah, the reason why I put that title, Bitcoin 200K, question mark, because I saw, just as I anticipated, I saw a title on some other YouTube video that popped up on my video stream on the side there, Bitcoin going to 200,000, or was it 250,000? I don't know. I saw some ridiculous title. And I said to myself, people still believe these outrageous titles and nonsense. I know it's no one here, but obviously someone believes, because this thing had over 100,000 views or something like that. And I was like, it just goes to show that there is a lot of emotional money floating around out there. And that's good for people that are informed or people that understand how to better position themselves based on risk, right? And that's really the primary objective of why I do these streams, because I want people to understand the market from a risk perspective first. Notice I'm not saying reward risk, I'm saying risk, because we should be focused on risk. The reward is a random result of good risk management. Okay, I also had a very interesting question from the guy in the free chat asking the difference between a swing trade and an investment. I'll touch on that also again, because I know a lot of people, there are a lot of misconceptions or a lot of confusion about the two. Trades can be, or trade types can be categorized by time horizon. Okay, so I want to touch on that as well. Anyway, so let's get started with this Bitcoin chart, because I talk too much and we'll be here all day. All right, so first things first, I want to talk about Bitcoin. I want to talk about the stock market. I want to talk about gold and the dollar. All right, those are like my primary markets I'm always checking, and the bond market. Now, Bitcoin. So we had this nonsensical move. All right, vertical, just vertical. What do? People get all excited. Should I buy now? No, this is not the place to be buying anything. This is a place to distribute risk. This is a place to sell, not short, but sell, take profits. Anyone that had the courage or the risk tolerance to get in around this area here, this breakout area, which we talked about. We didn't send out a swing trade signal on this, but anyone that managed to get into it around there, or even this continuation pattern, this was tough. I talked about this on TradingView. This was tough because technically it stopped out if your stop was tight, but if anyone managed to get into those, this is the place where risk is justified. And you're at greater than 1-to-1, you should be taking profits. Okay, someone is, we have a red candle there. So keep in mind, So to answer the question that I posed in the title, Bitcoin to 200K? No, you're nuts if you think that. Bitcoin pulling back to 50K, that's a lot more realistic, and that's what we're interested in. Okay, so the first thing I like to look for once I have my general perspective or my general view on the market, which is clearly bullish. Okay, higher low, we now have a higher high after this higher low double bottom area. Higher high, that means something. Now we have a lot of people asking, is this the top of the wave 4 consolidation? Is this thing going to pull back? Blah, 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 bearish, blah, blah, blah. Well, of course, markets can't sustain this type of move, right? This type of vertical move. So sure, I anticipate a pullback that's more reasonable from such a level. Let me talk about the resistances real quick. So this area, 57K, right? 58K. What was the high here? 55. I'm sorry. Yeah, 55 is the high. This line up here is 57K. Where did that line come from? Have I drawn that line randomly? No, the line comes from this area over here. Okay, as you can see, that is a congestion. There's resistance there. So it's likely that that congestion or the selling activity that is accumulating up there is likely to act on price, and we're seeing the red candle. Okay, so bad place to be buying. If you just bought this thing, you probably bought the top of the move. So when you see something like this, if this current candle closes like this, that's a bearish inside bar, and we take out the low of this candle, that would be a new sell signal in an area that's a notable resistance. Okay, I certainly wouldn't want to be long in such an area. All right, and I'm talking from the swing trade perspective, to be clear. If you're an investor and you just bought, well, the question you need to ask yourself as an investor is, well, how much did you invest? This would not be a good area to be piling in with a ton of money. All right, when you're at a high, you take small bites, not larger bites. And when it comes to investing, it's more about size. You use size to manage your risk, not price. People still don't understand that. I always talk about the example where you can basically, if you want to average into something like Bitcoin, you can just pick a day of the month. It could be the first day, it could be the 15th day, whatever it is, and you buy your small little increment. That increment, the amount of that money that you invest, has to be a function of a larger objective, meaning you have $5,000 to invest. Okay, so you can break that up into 10 $500 investments. On the first of the month, you make your $500 investment, no matter what the price is. That's going to give you an average price. And if the general Bitcoin trend is bullish over time, which so far it's generally bullish, you're going to be in at an average price, and if over time it should improve, right? Now, you can enhance that even further when price pulls back and price is getting beat up and everyone's bearish. Perhaps instead of buying a $500 increment, maybe you buy 2 units. So you buy 500 plus another 500, that's 1,000, until you accumulate all of your, until your investment is fulfilled, your objective is fulfilled, and your $5,000 is invested at an average price. At that point, you stop, because that's the amount of money that you determined in advance that you were going to invest. The reason why you have to stop is because if you keep putting more and more money in, and the market has a really dramatic move against you, it's going to most likely scare you out, okay? So you have to determine that amount and then stop. Now, if there's some sort of dramatic opportunity, like let's say for some reason Bitcoin pulls back to 25K, right? For some ridiculous news comes out or whatever, and you believe in the long-term value, then you can see that as an opportunity to maybe put in a little extra, maybe another $500. So now instead of 5,000, you have 5,500 invested, but you're getting really good prices, really low prices. Again, it's not about the chart. It's about your sizing. All right. So that answers the investment versus swing trade. Swing trades are more dependent on your chart timing, and where you're going to be using specific stops. Your size is going to be a function of your risk percentage. Or if I sound too fancy, what I mean is, if you only have a $5,000 account to swing trade with, your goal really is you're risking 1% and hopefully making 2% or 3% in a trade. All right, that's a good trade. If you can risk 1% and make 3%, that's a really good trade. What's 1% of $5,000? What is that? $50? So that would determine your size. Your size, that means if you're wrong and you're using the price, using the chart to determine where the stop should go, like in a case like this, let's talk about the double bottom here real quick, right? In a case like that, your stop would have had to have gone somewhere below 40K. The typical risk with Bitcoin recently has been about 4,000 points. So that means your size would have to be, would allow you to lose $50 if the thing moves 4,000 points against you. That means it's very small, okay? It's a very small position. People don't understand that, and they get too big, and you know what happens from there. Anyway, so that's the Bitcoin situation. So as far as swing trades go, I want to see a pullback to the next support. Where is that? That's around here. The old resistance, 48K to 50K, was a resistance. You could see here we have this congestion area right here, and you better believe that that's likely to act as a support on any retest. That area is attractive for longs, and it will give me a better reward risk. Now, what if Bitcoin never pulls back there? Because that's also a possibility. Well, then I'm looking for a continuation pattern. Hopefully, it'll be a little bit more defined than this over here. This was tough, okay? Very tough to send something like that out. But it's possible we could see something that tight again. But hopefully, we get something a little more definable, something a little more clear, and at a more attractive level. Okay, so the ideal level is between 48K and 50K. Less ideal level would be somewhere in the low 50s, followed by some type of clear continuation pattern. Okay, and of course be anticipating higher prices. The next move from there should test 57K. The 57K resistance, and theoretically should clear it, right? Higher lows lead to higher highs. If it can't clear 57K, that will be a failed high, and that would also confirm more that we're in this consolidation situation, and I'd expect to move just back into the middle of the range at that point. Because if this is a broad consolidation, which it can still be, then moves back into the midpoint of the range are not uncommon. Just like gold. We'll get to that here in a moment. All right, so anyway, that's the Bitcoin situation. Now, many altcoins, I've been looking around at the altcoins. Some of them are trying to follow. A lot of them are underperforming, which is strange. They shouldn't be doing that. Okay, so we'll take a look at those here in a moment. Now, let's go to the stock market real quick, because I'll talk about Bitcoin all day. All right, now, here's the NASDAQ 100. And this is important because, again, we had this big bounce. Now, keep in mind, tomorrow is non-farm payrolls, right? So we had this bounce going into non-farm payrolls, and that's the most important economic report that we get each month. Look at this strong close. Actually, the market's not closed yet, but that's pretty, it looks like it's going to close pretty strong. We're up another 175 points today. We're at 14,950 area. Now, let me point something out here, because if you watch any mainstream news, the stock market's back in bull mode. Santa rally early this year. Blah, 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 blah. Right? Meanwhile, look where we are. That's a resistance area. Okay? Buying here is very risky, to say the least. Not a place to be going long. But the retail trader doesn't know any better. The retail trader reacts to information. They're not looking ahead. So, people are going to be buying here. Oh, now it's time to buy Apple. I like Apple because I use Apple products. I'm going to buy more Apple because I use the company. Yeah. Right. That's your typical conventional wisdom type of nonsense. Right. It's completely irrelevant when it comes to market timing, especially short-term market timing. I'm not making fun of you if you buy Apple products. I'm just saying that you can't use that type of conventional wisdom to make investments. Markets are not rational. So here's the thing. If that's a resistance, what to do here? Well, there's no sell signal here. That's a pretty strong candle. Now, we go into NFP tomorrow. What kind of candle do we get tomorrow is the question that I need the market to answer for me. Do we get a bearish inside bar? Do we get a bearish candle that takes out today's low? If we get something like that, that would be a sell signal off of a potential lower high area. This high where it is right now, 14,950, is still lower than this high over here, which was what, 15.4? So if this thing establishes another lower high, then a move lower is likely to follow. Now, the question about that move lower, because this would be the time to be thinking about, like I remember the other day, DJ asked me, time to buy puts. Well, the other day, we were like over here at this low. And I said, no, you don't want to buy puts at the low, but at the high, now is the time to start thinking on the short side, not taking the shorts just yet, because this is still, there's nothing here, okay? But all we have is an area of interest. Also, similar to Bitcoin, look at this congestion back here. Right? There's just a very good chance that this thing finds bearish activity tomorrow or perhaps Monday. Tomorrow would be a good excuse because we have NFP. Right? That's at 8:30 a.m. Eastern Time. Now, in that situation, tomorrow, if you get the red candle and you want to take an aggressive short, tomorrow would be the time to consider that, actually taking the position. And using a put option would make sense because your risk will be limited. Again, you will need the market to establish that lower high. And if Monday we open and this thing starts breaking higher, which is possible, that's where, adjustment is required, taking the loss is required, or whatever. This market can squeeze a little higher because, again, markets are highly random and irrational, and the resistance may not really assert itself till up here, right? That is another resistance area that the market needs to clear, okay, in order to officially be back in bull mode. Now, the other thing to keep in mind, because this structure that we're looking at right here is a bearish structure, right? It's a corrective move. Forget this current candle. You have to look at the broader structure. If this thing pulls back, what we have to watch for over the next few weeks is the higher low or the double bottom. Now, the double bottom will be very convenient for the bottom of the Santa rally. Keep in mind, we're in October. A couple more weeks, right? We're getting more and more into holiday mode. If the market can find a bottom in one of those areas, we have company reports coming out over the next few weeks. We have the FOMC coming out again they're probably going to have more information on their whatever they're going to do with the interest rates and blah, blah, blah. If that leads to a double bottom, right, then you probably have your bottom of your Santa rally. That would be a good place to look for something like that. Now, I don't want to plant seeds of an opinion in your mind. You have to look at this as scenarios, right? Don't think of it as an opinion. Think of it as a scenario, because scenarios change. Opinions don't change, right? When you have an opinion and an ego gets mixed up with it, you're like, but I'm right. I'm right. I have to be right. I'm right. And even though you may not be saying that to yourself, your brain wants to be right, okay? Your ego wants to be right. So opinions are a bad thing. But scenarios, they change. So I think there's just the contrast in the terminology that we use, right? Even when we're speaking to ourselves, can be important in your market mindset. So scenario, higher low, double bottom. If we get it, that would probably be a good place to be buying your highly correlated stocks. What's a highly correlated stock? AMD. AMD's, I can't buy this now, but I would imagine if the market pulls back, AMD is a highly correlated semiconductor stock. I'd be looking for a long. This is a beautiful setup, by the way. It's a beautiful structure for a long. Okay, not this current candle, but any pullback to this support. I talked about this the other day in our chat room, by the way. I didn't put out a trade idea, but I said I like AMD because I saw the higher low. Other highly correlated stocks, what do you have? Something like Facebook. Facebook is not exactly in the best structure yet, but that can change, right? And that's what you're looking for, the change. What about something like Apple? Because, I use Apple products. Apple is trying to bounce like everything else. You'd look for the higher low and double bottom. In fact, the Apple chart looks very similar to the NASDAQ chart. All right, so anyway, just I wanted to point out a couple of examples. Let me move over to gold now. Oh man, I'm talking way too long on these things. All right. Let me talk about gold real quick, and then I want to get to your questions. So gold, like I was just saying with opinions, people love to have opinions with gold. And a lot of experts out there, I'm a gold expert for, 50 years and I know everything about gold. Yeah, right, except how to trade it. So here's the thing. Gold is finding a little bit of a resistance area here, right? Look at this resistance. There's clearly an old support, new resistance, and it's reacting to it right now. Now, gold is going to be sensitive to the dollar situation. I've been watching that dollar chart very carefully. Let's take a look at the dollar index real quick. This is very important because the dollar index affects everything, whether you realize it or not. So the higher low is there in the dollar index. And I talked about this the other day too. And it looks like it wants to go to break the high. I mean, it tried yesterday, right? Pulled back a bit. Sometimes the dollar doesn't move very quickly. I mean, today, this thing is minus 1 cent or whatever that is. So this thing breaks out. We have the higher low. Higher high is likely. Going right into NFP, it's in a position to break out. So if NFP comes out dollar bullish, okay, however the market wants to interpret that, you get the higher high on the dollar. Not good for gold. So as long as the dollar stays in that trend, I would avoid gold because, for one, gold is fooling around at these resistances, minor resistances, and you're better off waiting for supports, if anything, if you're going to take an aggressive position in gold. But if the dollar maintains that bullish trend, it's probably a good idea to avoid gold altogether. And that's going to include gold stocks. Now, let me point something out. Let's zoom out here on gold. Now, the bigger picture on gold, when we zoom out like this, okay, that's not exactly a bearish picture. That's a bullish picture. But going back over a year, as you can see, right, from the 2000 peak over here, this peak over here in this area, gold has been basically in a giant consolidation, okay? That's gone on for over a year. I suspect Bitcoin can give us something similar to this. That's when I talk about wave 4, this is a very good example of what a wave 4 looks like. As you can see, gold had the double bottom earlier in the year, right? Just like Bitcoin just showed us the other day, and gold had a rally. And everyone, gold is going to 3,000 this time. I can feel it. And it's not at 3,000 yet. Okay, so that's why don't get carried away with what other people say. Like I tell people all the time, don't listen to people, listen to price. Price doesn't lie. People react. People are emotional. People also have hidden or not so hidden agendas. Price has none of that stuff. Listen to price. Okay, so my point on gold, stay away from it, at least the CFD. Now, I see some questions on gold stocks. We'll talk about the gold stocks because a stock is a little bit different. Some of them pay dividends. Gold stocks are typically quality. They're higher quality instruments, right? So, but they're still going to be dependent on gold. So if gold pulls back for the next month or two or whatever, the stocks are likely to suffer. But we'll get into those in a moment. So those are the main markets I wanted to talk about. And real quick, let me just throw in the bond market. It's always a good idea to check this, okay? No one talks about this. But this is the 10-year note futures. And as you can see, look what we have here, okay? We have a lower high established earlier in the week, and look at that week close. You see that? Lower high, lower low. Well, it hasn't made the lower low yet. Possible double bottom area. But the way this thing's looking, lower high, likely to make the lower low, and we're going into NFP. Great catalyst for such a scenario, right? Bonds go lower, dollar should go higher. That's implying rising rates. All right, very important to keep an eye on that because as the dollar continues higher, it will put pressure on these other markets like the stock market that everyone seems to think we're back in bull mode. Not exactly. Not with the bonds looking like this. It's just not a one-to-one relationship. Okay, so let me move now on to your questions. And again, I appreciate everyone's questions. Thank you for asking. So first thing I want to do, the guy from the free chat, I touched on swing trade versus investment. Let me just go into, he had a bunch of charts. Let me just go into one of those charts because this is gold. He asked about silver. So let's take a look at silver, XAGUSD. I mean, it's similar to gold, right? Silver follows gold. The chart's not exactly the same, but it's similar, right? Now look at the situation in silver. So we have lower highs and lower lows. We have a lower low over here. Silver right now is at a potential lower high area. Is this a place to be buying silver? No, especially in light of a stronger dollar, okay? In this situation, if you're going to do anything with silver, for one, silver is not a very good trade, short-term trade instrument. It's better for long-term, longer-term type of hold. And, you know, the CFDs charge swaps, and they're really not worthwhile. The position sizes are too big. So I really wouldn't do anything with silver. If you're interested in doing something with silver, at least wait for a support. The support on this thing is 21.5, around there. This thing right now is at 22.60. So it could pull back $1 still, and you can get a slightly better price. But just keep in mind, you're at the range low of silver. So if you're going to pick up some silver inventory, I guess you can say, you know, now would be a good time for physical silver, I think, because you're buying a range low. But, you know, physical, you're holding on to that. You're not selling that right away. You want to buy low prices, right? Not high prices. And here we are at lows, and it might go lower. That's the way it looks right now. If that 21 area breaks for whatever reason, your next support after that is, you know, you got a ways to go here, around 18.5. Okay, so just some levels there on silver. Now, let's move along, and let me see what kind of other questions I have here. So, David from Spain, Doji EUR. So here, I'll take a look at Doji USD. The charts are going to be similar, right? Doji EUR, euro, and against dollar, they're going to be similar because they're both, you know, stable counter currencies or whatever. Now, so look at this. This, I have to say, with the Bitcoin rally, I've been seeing this relative weakness across a few coins. This is not good. This is not what you should see from your altcoin that's supposed to be following Bitcoin with such a Bitcoin rally. Now, let me point something out here. This right here is an old support, new resistance. And what are we getting here? We have a sell signal. Okay, so let's make that bigger. Look at this. So you had, this is not exactly a pin bar yesterday. That's not a pin bar. It's more of a doji. But you took out the low of that candle. That's a sell signal. So not a good place to be long this thing. And this thing's a garbage coin to begin with. Keep something in mind. Altcoins should be treated like penny stocks. I don't care what their promise is. I don't care what their value proposition is. I don't care how great their idea is. They're worthless. Okay? They only have value because people believe in their future. Now, just an example, no one knows. You can believe all the hype they want to feed you on these projects that, oh, they're going to do this, they're going to do that, right, until something else comes out better that no one foresaw. Okay, 20 years ago, Amazon had a lot of competitors. There were quite a few other stocks back then that were doing similar things, not exactly like Amazon, but they would be considered competitors. No one back then believed or was saying that Amazon would be where it is today. No one. So it just goes to show, right? Now after the fact, oh yeah, Amazon, that was easy, right? Yeah, I bought Amazon, right? Yeah, right, whatever. No one would even imagine that Amazon could be at $3,000 or whatever 20 years after, when it was $5, right? And all those competitors that were around at that time, those stocks are no longer listed. So just to point out on these junk coins, don't treat these like investable assets. They're not. They're lottery tickets, okay? Who knows if they'll go in the future? Maybe they will for some reason, but most likely, most of them will probably go nowhere. That's just the way things are. So you have to, you know, just basically, the way to deal with that type of risk is you don't have a lot of money tied up in them. And if one goes and you happen to be in it, hey, you'll have an outsized return on that one. But who knows which one is that going to be? If you ask the founder, oh yeah, it's going to be my coin. Yeah, sure. Okay, yeah. You and 10,000 other coins that are going to be the future and blah, 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 blah. All right, so just something to keep in mind. If you want investable assets, you should be thinking of high quality stocks that pay dividends over time. Okay, there are many industry leaders that you can pick from. You want to put your money into something that's quality, I don't even have to say any names. There's plenty of them. All right, altcoins are high risk and they're highly speculative. Even Bitcoin, which is the leader of the whole space, is still speculative. Right? You have to keep that in mind. It's very important when it comes to managing risk on a portfolio level. So that's Dogecoin. I don't like it. Okay, if you want to do anything with this thing, at least wait for a support, and your support is here at 20 cents. All right, this thing right now is at 24 cents. 20 cents isn't that far away, but the chart does not look very good relative to the Bitcoin performance. I'm looking at relative strength, right? So if Bitcoin is breaking out like it has, this thing should be much higher than it is. Okay, so just something to keep in mind. So if you're not in it, it's probably better to wait. If you're in it, this may call for some adjustment, but theoretically what you want to see, because you do have this higher low established, theoretically this thing should be working its way toward a higher high, but I don't see that right now. I just see a sell signal at a resistance level after Bitcoin made a significant move, which is relative weakness. Okay, so that's Dogecoin. Okay, let's see what else we got. Okay, DJ, hey Wedge, all right, said hello. X, Cardano. All right, ADA. So ADA USDT. Let's see what we got here. Now Cardano, big hype coin, and here's the thing. This is problematic. Okay. Now that's a good-looking candle you got right now, but Bitcoin's made its move. This thing should have outperformed if it was going to be relatively strong. Not just get started now. This is relative weakness. And I saw this on a few coins, right? And it's concerning because it's probably got a lot of people thinking like, oh yeah, they're going to catch up now. They're going to catch up. No, they're not going to catch up. If Bitcoin pulls back, these are likely, the whole relationship is, something that's relatively strong will do better than the parent instrument, in this case, Bitcoin, when Bitcoin makes a good move, right? That's the typical thing like with S&P and stock. Right? S&P has a green day. If your stock is relatively strong, your stock outperforms. It does a higher percentage than the S&P, right? If S&P has a good day and your stock is struggling, that's bad. Excuse me. That means, that means someone is selling the stock in the face of strength. And as soon as that S&P turns around, your stock is going to be the first one to sell off. That's relative strength, relative weakness. That's what I'm seeing here with this coin, right? And quite a number of other coins. So you have the green candle, which is a buy signal, but I don't like it relative to Bitcoin. Now, let's look at some other levels here. You have your support. What is this level here? Basically $2.15 around there. That's your range low. Right now, you're fooling around closer to a range high. It's at 229. And your range high, right, this little old support, basically, it's coming off of this old support, new resistance. It's a minor level. You're looking at $2.30. So theoretically, if this thing is going to stay strong, right, what it should do after such a candle like this is the next candle should open, go green, right, and make a higher high. But it needs to clear this resistance area, and it needs to clear this little peak over here. What is that, $2.45? It needs to do that quickly, right? In the next few days, it needs to do that after this type of candle. Otherwise, what is more likely to happen is, keep in mind, you have to understand what's going on here. People are buying this, right, blindly because they don't know any better. They're buying it. And when it doesn't go, everyone else who knows better starts selling it, and you get a red candle. And once that red candle develops, that means now everyone's got to get out of this, and they're all going to try to get out of it at the same time, right? Kind of like this situation with this pin bar back here. Same idea. So if you get something like that, you're more likely to see the range low again, especially if Bitcoin pulls back, right? That's what I'm looking for there. Now, what could negate what I'm just describing is if there's specific news that comes out on Cardano, some specific hype or whatever that gets everyone excited, and then you see the breakout, right? The momentum breakout. That's what could cause something like that, some sort of specific catalyst. Now, overall structure is not bearish. Overall structure, this little range in here is a higher low. Yes, you have that. So you do have that going for you. But it is concerning that Bitcoin could make its move, and this thing is still trying to figure out what it wants to do. Okay, so you have some conflict there. Best thing to do, in my opinion, is wait for a test of the low or midpoint, right, for maybe a higher low for the next leg higher. At least try to get a better price on something like this, because what happens if Bitcoin pulls back, right? Bitcoin may just be at the starting point of that pullback. It hasn't even begun yet. Okay, so we have to see. What if Bitcoin pulls back to 50K? How is Cardano going to behave? So I don't like the risk for that reason. All right, so that's Cardano. Thanks for asking. Eligius, okay, from Lithuania. Can you pronounce? Okay, I went over that earlier. All right, UBI stock. All right, so before I do that here, so let me just jump back to, since we're talking about some blockchain stuff, let's go to Riot. This was another question that I had from the chat room. Riot is a blockchain stock, okay? And here's the thing with something like this. For one, it's going to be sensitive to Bitcoin, right? Now, it's strange that, again, Bitcoin had such a nice move, and this thing, is this thing negative today? It's minus 31 cents. That's not good, okay, for something like this. This thing should be doing something much more bullish, right? Instead, what I'm seeing here is it can't even break this little mini resistance area. It's fooling around near a previous support. It's got this area right here, but I would not, this thing is not performing very well. So if Bitcoin pulls back, where's this thing going to go, right? I don't like the relative weakness. You have lower highs, you have another lower high over here. This thing is more likely to test this low, right? That pin bar low, which is 396. This thing right now is at, I'm sorry, what was that price? Not 396, 2396. I can't read, right? This thing right now is at 26.21. So this thing could pull back another $3 and possibly break that low based on the structure that it is showing right now. So I would hold off on this. I wouldn't do anything with something like Riot. Okay, so let me see what else we got here. So what was that? UBI. What is that? UBI stock. Oh, Ubisoft. All right. Oh, yeah. Look at this. Ubisoft Entertainment. So here's the thing. Looking back, right? Bigger picture structure. Recent price action. What do I see here? Lower high. Okay. What do I see here? Lower high. What do I see over here? Lower high. What do I see right now? Lower low. So no good. Right? Avoid. If you're in this thing, hopefully, you're not in from a really high price, but this is not what you want to see, okay? Especially on a day where the stock market is strong. It broke this support. That's a lower low. It's confirming the weakness. There's nothing to do. So I could see maybe you're looking at this as a possible long for, like you're testing some previous levels that go back some time, right? Some support levels that date back some time there. I can see that. But the thing is, the structure is not supportive at all. So what you want to see in this situation is you want to see stability develop. You're going to have to wait maybe a week or two. What you want to see is some green candles. You want to see like an initial move higher first, something like this over here. You want to see something like that, or maybe even something more dramatic. I mean, something like this is good too, but keep in mind, you're not going to play something like that because it's random. You don't know which one you're going to get. You want to see the stability develop first. Then you want to see it pull back and see if you can get the higher low. That's the first thing if you want to take an aggressive trade in this situation. It's still aggressive because the structure is still bearish. Even if you get that little reversal, right, it still has to compete with all of this up here. So until it takes out this level up here, what is this? 55.5. Until it takes out that resistance, this structure is not bullish. So maybe it goes into a range or something, but I would not be thinking long-term bullish until that 55.5 is taken out at least. That would be your first sign of change, of structure change. Okay, so thanks for asking about UBI. Let me just see what else we got here. Okay. What your insights from Elliott wave? Okay, this is a year trend is bearish, but a high quality stock. So maybe there are some signs. All right, Elliott wave. Well, as far as Elliott wave goes, what I do with Elliott wave, because people tend to overcomplicate this, I look for the simplest count. Right? I'm only interested in the simplest count. And the first question I like to ask is, can I count 5 waves? Okay, so I have a wave 1, this is a wave 2, I see a wave 3. Actually, this whole thing is wave 3, all the way to here. That's a wave 3. You have a wave 4 consolidation, right? And possibly wave 1 of 5. No, it's not even the same magnitude. I can count 5 waves here. So it starts to get confusing. I see 5 waves. You have this potential wave 1, right, of maybe a new structure, and then it goes back to the low. So I'd have to just, to keep this simple, I would say, yes, 5 waves are within reason here. They're countable, which means this thing is probably going to exhaust soon as far as the selling goes, right? But that doesn't mean it won't go dramatically lower first. So there's no, what you want to see as far as Elliott wave goes is, as far as a reversal, just like a double bottom or high or low, it would have been nice if this structure was able to hold something like that. But to be a wave 1 or wave 2, right, a 1 into 2, 2 cannot go below the lowest point of wave 1, and this is below it. So that means that whole wave 1 idea of a new structure is canceled. So yeah, there's really not much there's not much Elliott wave there. That's all it's saying as far as the wave count goes. So I would just hold off. And a lot of times, like I said, unless the Elliott wave structure, the impulse structure is painfully clear, you're better off looking at the price structures by themselves, because you'll become less opinionated. One of the obstacles with Elliott wave is it can really plant a seed of opinion, like, oh yeah, this has to be a wave 2, this has to be a wave 3. And if you paid more attention to the structure, it'll get you away from that absolute thinking. Okay, anyway, so good question. Let me see what else we got here. About trend reversal. Okay, so I went over all that, especially on the weekly chart. Can we look into this bearish trend as a bigger corrective wave 4? Okay, well, as a bigger corrective wave 4, I'd have to go to the weekly on that. Let's see. 1 week. I see what you're talking about, and yes, I would agree with that. Look at that consolidation. I mean, this has gone on for years. Yeah, you could definitely argue that that's a corrective wave 4, and you're near the lower part of it. But there's nothing that says it's going to reverse now. You still got, this thing can pull back quite a ways before that is over. So you're looking at potential range low territory, yes, and a possible wave 4, yes. But for this thing to recover, even if that's the bottom of wave 4 or near the bottom of wave 4, it can take a year for that thing to recover before it's obvious that it's in a new structure, something like that. So just something to keep in mind. Okay, anyway, thanks for asking. Peter, from Slovakia, DOT, getting interesting now. Sure, DOT USD, DOT USDT. Let's take a look. So yeah, I was looking at this one earlier. Yes, this is interesting. So the structure here, right, range low, bullish, right? A higher low over here. What's this price? 27 area. You have a little mini higher low here, right? And now you have this little breakout situation going on, right? You have this little break of this little resistance, and that's a good sign, right? Those are bullish signs. Now, the thing is, Bitcoin has made a move, and this thing typically follows. So the question is, do you buy this thing right now? I wouldn't, because you have this resistance right here. You have this resistance over here. Those levels are look, they even coincide with some old levels dating all the way back to here. There's too much resistance ahead, okay, for what's worth, to justify the risk for a swing trade. So I would not touch this thing now. The place to have bought it, and of course we can see this after the fact, but it was the double bottom. It was very similar to Bitcoin, right? Very similar to that Bitcoin situation. Chasing this thing now is you're just chasing it. So what do? Well, in this situation, I would wait, just like for Bitcoin, I would wait for the higher low, okay, which can put you back in this area right here. That's what price? Around about $32, around there. I'm sorry, $30. Yeah, around $30, low 30s. That's where you want to see a test of that. That would at least give you a potential higher low after a nice initial move, right? And that's the same scenario I'm looking for on Bitcoin. So I'm not interested on these levels. I want to see the higher low or perhaps another test of the range low. Those are your high probability levels. Now, what if the market never revisits those levels? That's a possibility also. Well, the next thing to do then is wait for some sort of continuation pattern. There's nothing there right now. You'd have to wait for the breakout, okay? Leave it alone, let it break out, let it retest this resistance area as a support. That requires a lot of patience, okay? That may take a couple of weeks. People don't like when I say that, I know. And they want to be part of the breakout now. I want to be in it now. Just in case, what if it runs to whatever without me? It'll pull back. They all pull back at some point, okay? How far they pull back, we don't know, but they will pull back. So that's what I would do, because right now, this is a low probability area. This is likely to find selling activity, right? Doesn't guarantee that it will, but it's likely. Why take that risk? It's not worth it, right? You can't justify your risk. It's very tough to justify your risk here. The market really would have to move in your favor, right? So those would be the scenarios I'd be waiting for on something like DOT, and using Bitcoin as your guide I think would serve you well. Now, speaking of that, let's take a look at Coin. This is another one that was requested in the free chat room. Now, Coinbase should be following Bitcoin, right? That's a nice move on Coinbase. Take a look at that. It's up $1.22 today. This thing is off of this low, very similar to Bitcoin. Now, what do you do with this now? Do you buy this thing? Look where you are. Look at this old resistance right in here, okay? And look what price is going into right now. I wouldn't go near this thing at this price. You're in the middle of this range, highly random area, not worth it, okay? So if you're interested in something like Coinbase, you really need to wait for the range low, which is what, 225 around there. You're either waiting for that or you're waiting for a higher low, just like the same story as Bitcoin, around 235 area. This thing right now is at 245. So there's some room there, right? There's some room for pullback. That's what you're looking for. That's what you would anticipate. Again, people have no patience. So they don't want to wait for something like this, right? Especially if the market gives us a nice, strong bullish candle tomorrow, which is possible, right? It can do something like this. Very possible. Of course, Bitcoin would have to work its way higher as well. But here's what people don't realize in this type of situation, and this goes for Bitcoin as well. People want action and they want profit right now. They don't want to miss out. So let's say you buy it at the open tomorrow, okay? Let's just say, and it closes green. You're like, yeah, I'm green. All right, I'm in this thing and it's working. Now, how much longer do I hold it? And then the next candle after that is a red pin bar, and you're like, oh, but it's strong. It'll come back, right? And then it goes here, okay? And now you're red. Was that green worth it? It was not, okay? And that's what people don't realize. They cannot see. They refuse to look ahead. They only react to what is in front of them now. Not worth the risk, okay? So if you risk $5 to make $1 or $2, you will never win, okay? It has to be you risk $1 to make $3 or $2 or $5 or something like that. That's the only way to win. That's the only thing we can do as a retail trader. I mean, obviously for a professional trader, they have to do the same thing, but we have to be especially careful and we have to be especially selective because there's so much working against us. We have little to no advantage in any financial market that we trade. As much as the brokers, they prepare us with all these tools and all these platforms and thousands of oscillators that are going to help you make more informed decisions because you're a smart investor if you trade at our brokerage firm, right? All that nonsense, and no one makes money. So there's a lot working against us. People don't realize that most of the time there's no advantage to no matter what strategy. There are strategies that you can find on YouTube. I've looked at a few of them. They claim that it's got an 80% win rate. Of course, everyone, oh yeah, 80% win rate. That's so I only have to take risk. I only lose 20% of the time. That's easy. Don't you think that if that was true, some smart algo trader will take that strategy, program it, okay, make 80% in his sleep and only lose 20% and blah, blah, blah. And not only one smart algo trader would utilize it, but hundreds of them would probably utilize it. And the strategy will no longer be 80% win rate. That's the way it works. So there's no such thing as, if something has an 80% win rate, I just have to put this rant out there. If something has an 80% win rate, they don't share it for free, number one. Number two, they don't share it at all. All right, never mind for free. So just something to keep in mind. The win rate of those strategies is more something like 50%. It's random. But they'll prove they're 80%. You know how? They go back, let me show you my back test here. I'm going to do my back test, and look, I went over 100 trades, and 80 of them were green. It's 80%. Right. They went over 100 trades in the most recent environment, right? They're just going back a month or two in their charts or whatever. And of course, that's not going to be the same environment that we're going to face in the future. So it's nonsense. Anyway, all right, enough of that rant. Let me move on to the next question here. All right, so what was that one? That was Coinbase. All right, let me see what else. So I went over Dot. Okay, hey, Winter Fresh from Romania. All right, cool. I'm very popular in Romania. Who? Hey, who? SWN. Let's take a look. What is SWN? Is that a stock? I hope that's a stock. So Southwestern Energy Company. Let's take a look. So bigger picture. Now, energy has been interesting. Before I get into more detail on the stock, let's just take a look at oil, because oil's been out of control, right? Let's just take a look at oil real quick. Look at this bullish trend in oil. This is pretty bullish. And now we have this breakout. It tried to pull back yesterday. Now look at today's candle on oil, right? That is not what a pullback should look like. So someone had mentioned they'd shorted this thing. If you're short, this is definitely not the candle you want to see, okay, after a bearish candle. So anyway, with that being said, let's go back to the energies, SWN, because that's going to have an effect, right? Oil is going to most likely have an effect on something like this. The general trend on this thing, you could see, is generally bullish. I mean, going back, higher lows, right? A little bit of a corrective move, higher low, well, actually double bottom relative to this. We have a higher low over here and a higher low establishing right now, today. So let's look at these support and resistance levels. You have this old support became a resistance, right? And now it is potentially acting like a support again. So I have to say, I mean, I like the general structure. I think it's generally strong. You have oil behind you, okay? Oil is working, I guess, in your favor. I don't know how related to oil they are, but they are both in the energy sector. You have an inside bar, bullish inside bar, and it's going to close this way, okay? Those are all good signs. Now, if tomorrow's candle opens and takes out the high of this inside bar, you do have a buy signal, all right? It's a little conflicted because you have this little mini lower high, but again, you have oil behind you. So I would expect that, you know, buy signals are more likely to follow through. Your risk is going to be defined by the $5 area right here, right? Just below that candle, $5. So if you're buying this basically at 524 or maybe what, 530, maybe 550, you're risking about 50 cents. I mean, how hard would it be to make 50 cents? The top over here is about $6. So you're at 1-to-1 if you get here, if price can reach there. And that looks within reason, because if this is a higher low, it's likely to make a higher high. And the energy sector is strong. Okay, so you do have that going for you. I would anticipate that it should actually work its way higher than $6 if you can get some follow through, right? And that's a situation where you want to see if you can get more than 1-to-1. So what do? Let's just say you bought 200 shares, right? You sell 100 shares at 1-to-1, which is about $6, and then you let the other 100 ride to see how far it can go, right? That's very important that you do something like that, because that's what really dramatically improves your reward risk. All right, what if this thing runs $2, you know, off of this low? That turns into a nice trade. Okay, so it's definitely it's worthwhile if you're following that thing closely. All right, so thanks for asking. Who? Okay, Jenny Junior. Cool, thanks. Although you specialize in swing trades, can you please share how one should define her take profit targets under inventory? All right, that's a good question. Let's go to Bitcoin for that. So as far as, inventory referring to investment type of trade, look at it this way. When you have inventory or you have an investment from a good price, okay, let's just say a good price in this case is around those low 40s. You bought some there, or maybe you bought some at 30, whatever. When something goes vertical like this, and it's on everyone's radar, and you see YouTube videos with titles like Bitcoin going to 200,000, use that as your guide. You don't have to use a specific price. If things go vertical, just take something off the table. If you want to use price, I mean, just find resistance levels. You're at one right now. Between here and like 57K is generally a resistance area. It's just not a bad idea to take something off the table, right? Even a little off the table. Now, you have to decide though, how aggressive or conservative you want to be. If you're going to be more aggressive, that means you're going to take less off the table because you're expecting this thing to keep going. That's usually a bad idea, okay? So, if you're taking, 35%, 30% off, you locked in some profit, and hey, if you still have some inventory, even if it goes higher like you thought, you're still in it. You're still making money. Don't let greed get in the way, because you know what people think. Oh, I got this much money in it, and if this thing goes to 60K, I'm gonna make this much money. Why should I get out now? I'm missing out. Right, but that same mentality is what keeps you in. You don't take anything off the table, and then it pulls back to here. Why didn't I take any off the table? Right? So it's just a good habit to be in. When something goes vertical, take something off the table. And if the market pulls back, now you have an opportunity to buy it back, right? Put it back on. If the market never pulls back, you're still in it. So you win either way. You just win a little bit less. But this game, again, everyone wants to win the most. But it's not about more. It's just about winning consistently, right? If you're taking money out of the market and you're able to do that consistently, it doesn't matter how much. What matters is that you're making more than what you risked. That's what matters. So if you risked $1 and you made $2, but the market runs $10, yeah, it sucks because you missed $8 or whatever, but you still made more than what you risked, right? And that's really what you have to be able to do. And over time, when you get more confident, you let some run, but you let a smaller amount run so that if it pulls back, you don't care, because even if it goes back to break even, you're still green because you locked some in at the high, right? So it's really more of a habit, not a specific price when it comes to inventory, okay? You're never going to sell the top. So, I can sit here, we can go over, I'll show you Fibonacci extensions. I'll show you moving averages. I'll show you this. None of that really makes, it's not going to help you at all. Okay, because none of those techniques are going to tell you the maximum price to take off. It's still going to be random. So it's more of a behavioral thing. So thanks for asking. Good question. Alex, hey, from Romania. Another Romanian. See, I'm very popular over there. I should learn how to speak Romanian. Hey, Michael, good to see you. You want to make... Yes, you know what, Michael, I'm glad you remind me. NVS. Yeah, so I'm glad you came in here because... So Michael... had shared a trade idea a couple of weeks ago in our chat room, and I saw the idea and I wanted to talk about it and I kept forgetting. So Michael, thanks for stopping by. So Michael's been a long time follower of ours, and he shared this idea. He came up with this idea because he learned from the style and techniques that we always put in the chat room and the perspective. So Michael was calling this thing long, right? He called it a long. It was what, from somewhere back here. It was basically based on this double bottom situation, okay? And so I want to comment on it because it was a good idea. Look at the level, right, where it's coming from. That's good. Now this thing is wild. Look at this thing, because look at the structure and look at the pullback. You're coming off of these highs and it sold off pretty quickly, right? that's the first thing. Now, the second thing is the idea that Michael was talking about was based on the double bottom, right? Not just stepping in front of something like this. So I would still consider this aggressive, because just because you get a double bottom doesn't mean the structure has changed yet, but it's better than just stepping in front of a single candle, right? So you have that. Now, the reason why I wanted to point this out is because there's two ways that you can go about something like this, right? The double bottom, which is the aggressive way, and it's, as you can see, it's trying to stabilize. It's trying, okay? Maybe over the next few days or a few weeks, this thing could start working its way back up a bit, and you're looking at, you know, a bounce. You're looking at resistance areas here and like here somewhere, right? Those are potential resistance areas that this thing can reach, which would be a good reward risk. That makes sense, right? From that perspective. But it's aggressive. The trade would be aggressive because you don't have any structural change here. You have this steep pullback, and this, if that momentum stays intact, this thing can make that lower low. So in these situations, especially for a swing trade, that's what makes a swing trade distinctive, is using that stop, you know, compared to an investment, right? An investment, you're going to hold on, and if this thing goes lower, hopefully you're small enough to where it doesn't really cause much pain. Swing trade, you have to get out because you're going to be bigger. Obviously, the position is going to be bigger, and you don't want to get caught in something that's just going to keep going lower, right? So you take the stop somewhere at these lows. Now, at this moment, this thing can go that way. You have a bearish pin bar, right, that closed today. You have to see if this thing can stabilize further. Now, this thing obviously is not very highly correlated to the stock market. The stock market had a strong day today, and this thing not really. So you have kind of that working against you. So the one scenario, like I said, is you're buying into the possible double bottom, and you're looking for that eventual bounce. Now, the more conservative thing to do would be you wait for this little consolidation area that's developing here to be cleared. The resistance needs to be cleared, right? This level right here. So if you can get above that level, what is that? 83.63. If price can close above that, that's your first sign of stability, right? Or change, or basically telling us that this steep bearish structure is losing it's not, that momentum is no longer there, right? And then after that break, so you can either take that break and then use the low of the range as your stop or to define your risk, or you wait for it to break and then you wait for the next pullback. Okay, again, it requires a lot of monitoring depending on which one you want to go with something like that. But what I liked about the idea is, for one, you know, he saw the stability develop first in an area that made sense, right? Because again, you had some support from back here. But I wanted to point out the structure, you know, what you're up against, right? Because while I know everyone will focus on this part, okay, double bottom, off of support, blah, 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 you can't lose sight of this, because that's steep, and that broke a lot of supports, and that momentum at this point may still be intact, the bearish momentum. Okay, so that's what I wanted to cover primarily, and I wanted to point out what type of changes you can see depending, you know, on how this thing stabilizes or not, to help you manage your decision making. Okay, so thanks, Michael, for sharing the trade idea in our chat room, and thanks for bringing it up again so I can go over it, because I thought it was a good lesson. Okay, cool. All right, hey Sean, SHIB USD. All right, let's take a look. SHIB USD. What's the story here? Oh yeah. So who was asking me about getting out earlier before, right, with Bitcoin in the vertical? Look at this vertical move. So if you're in something like this, obviously, first thing when I see something like this, hype. Okay, that is hype. There is a chat room somewhere, or there's a blog somewhere, or there's a YouTube channel somewhere that hyped this thing. Or maybe it was the developers themselves. I don't know. But the point is, if you're in from the pre-hype move, right? If you're in from this consolidation somewhere, and you get a move like this, and it's vertical, I mean, look where this thing is right now, man. That number, it's still sub a penny. What is that price? 0.00035, okay, was the high. Now, so forget the price here for a moment. If you're in something like this and it multiplies like that on you and it goes vertical, there's no way to know how high this thing is going to go, right? You're going to have all kinds of people telling you it's going to go to $1. This thing's going to go to $10. You're going to be able to retire on this thing, okay? Please toss all of that aside. When you see something go vertical and you're in from a low price, you just sell somewhere, okay? There's no way to know where this red pin bar is going to develop. But obviously, someone is getting out because that's a bearish pin bar. And once this candle closes and takes out the low of the pin bar, that's a sell signal. Someone is stuck at the top because someone, listens to the hype. You don't want to be that person. Now, I've seen plenty of coins. They'll do something like this. Okay, maybe the next candle might be red, the next candle, blah, blah, blah. And then it finds a higher low, right? Something like that. And then that's when things get tricky. And then it gives you another buy signal, right? In those situations, if you're aggressive, that's what you have to decide, how you want to deal with something like that. But like buying this thing right now is a bad idea. Hopefully, if you bought it from a low price, you've locked something in. But should you lock the whole thing in on a bearish pin bar? Well, again, that's going to depend on how aggressive you are. In a situation like this, since these are garbage coins and it's not like these things have any real value, it's probably a good idea to take like half of your position off, I would think, right? Just to be safe. And if it turns around and you see like the reversal, then perhaps you could put part of that back on and see if you get the next leg higher. Meanwhile, you're still in half of it, right? That kind of thing. And you see if this thing wants to work its way higher. I've seen plenty of coins do stupid things like that. But the point is, at this moment, you don't want to be in it. You want to wait for the pullback of some kind if you want to get back in, either way. All right. But my point to the other question before was, when do you get out when things go vertical like this? Because you don't want to be stuck in the bearish pin bar. And this thing, it's possible that this thing goes all the way back, right? All the way back to the consolidation area, which is what? 0.0000073, blah, 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 okay? So wait for some structure to develop. Thanks for bringing that one up. Again, these hype coins. Treat these like lottery tickets. All right, let me see what else we got here. So that was SHIB. All right, okay, Kim, SHIB, yes, right, see? Poloniex have more historical. Oh, they're on Poloniex? Okay, hold on. Let me see. Let me pull up the Poloniex chart here. Let's take a look. SHIB is on Coinbase. Where is Poloniex? Poloniex. Okay, so let's take a look. Let's take a look. Oh, well, not much more. Yeah, so, and let's just coincidentally, look at this. Thanks for bringing this up, Kim. Look at that. So obviously it's been here before. And someone is getting out, around that same level. So yeah, definitely a hype coin, lottery ticket type coin. Thanks for bringing that one up. A lot of people get sucked into this because they don't know any better. Let me see what else we got. So thanks, Kim. Sean, I think it was Elon tweet, but yeah. Oh yeah. Oh, especially if it was, you see these morons on TikTok. I have a feeling that Elon Musk is going to come out with a tweet. Would you believe people like actually buy into that kind of stuff? I mean, wow. Back in my day, in order to be an authority, you had to be an authority. You had to come from like a top school. You had to be like, come from a major bank or something. You had to work in the industry at least, okay? Today, you have a 15-year-old boy in his mother's basement, in his parents' basement. I have a vision. This SHIB is going to be 100,000. Right, thanks, 15-year-old boy with no experience at all. Anyway, but clearly there's a lot of emotional money. Like I was saying before, there's a lot of emotional money out there that believes this stuff. And you can capitalize on that as long as you're not part of that emotional herd. Okay? You have to be able to see through that stuff. All right. Elizabeth, hey, good to see you. Thanks for stopping by. Izzy, hey, fundamental or technical analysis? Is that a serious question? Fundamental or technical analysis? Well, I'm a chartered market technician, so by default, I have to say technical analysis. No, I'm joking. I'm a big proponent of technical analysis. Fundamentals, they're good to a point, but on the retail level, in my opinion, fundamentals provide very little timing value. You know, if you have a company that's producing some kind of product, they're dominating their industry, they have good management, blah, blah, blah. Those are all fundamental factors that can help out the stock. But let me just kind of give you an example of fundamentals. A couple of years ago when all the cannabis sector was hot, right? Certain stocks, CGC, oh, they got great fundamentals. Oh, their CEO has connections with Pepsi, and the CEO knows this guy and that guy, and they're going to produce this, and they're going to put pot in beer, and well, that was another company. But anyway, you get the idea. All these great things. Where's CGC now? It's in the toilet. So it doesn't matter. Fundamentals, they're good until they're not good, right? So I never, ever, ever, ever make decisions on fundamentals. They're just to help people feel good. If you notice, major news stations and a lot of other, even YouTube people, they rely on fundamentals. You know why? Fundamentals make for a good story, and people love good stories. I don't see Jim Cramer talking about charts that much. You know, he's like, oh, you know, the CEO of this said that, and blah, 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 and blah, 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 and they're making this much money, and blah, blah, blah. Yeah, thanks a lot. Meanwhile, technical analysis, and the reason why I'm going on this rant is because technical analysis, price itself, factors in all the known information in the world. Price is a discounting mechanism. If you can just embrace that idea alone, you don't need fundamentals, right? And that's why I'm able to see through you know, garbage coins like this. By embracing that fact of technical analysis, you can basically trade any market. You don't need to be an expert. Oh, I'm a gold expert. Oh, yeah, I'm a silver expert. You don't need any of that expertise because price tells you everything you need to know. All right? Anyway, okay, enough of that rant. I could talk about that for hours. Okay, DJ, Wheaton Precious Metals. He asked this like an hour ago. I'm just getting to it now. Wheaton. So like I was saying about gold, these things are going to suffer, all right? Wheaton is a good stock. I believe they also pay a dividend. It's a good gold sector stock. Now the thing is, it's pulling back, right, with this gold situation. Structurally, you have this little attempt at trying to go higher, but that's really not enough, especially in light of the stronger dollar. You have a resistance here. You also have a lower high. This thing's coming from a lower, little mini one over here. This thing is likely to produce another lower high. So I would be looking at lower prices, okay? Something like that. Where's the range low on this thing? Going back here, look where it's fooling around. That's a pretty significant level, but the structure is not favorable at all. And since that gold situation is not favorable either, I would not be putting on more. If you're looking at long-term investment, well, you do have an attractive area, okay? Good place for a small bite. Definitely not a good place for swing trades. If you're all in on something like this, then I wouldn't just keep putting more and more on. You want to wait until it gets extreme. And extreme would be below this price right here, which is 36.63. And gold would probably have to get a little more hammered for that too. But just keep in mind, that 36 area would be a nice range low, higher low, broad higher low situation. So you have some room to play with here, right? That's where inventory can get interesting. This is a good stock for inventory, in my opinion, if you want to get gold exposure without all the wild roller coaster rides of gold. Now this thing obviously moves, so you have to make sure you size appropriately. If that $36 area breaks, if this support breaks, right, and gold gets hammered for whatever reason, I mean, this thing can test some lower prices, which are hard to believe right now, $30, right? So keep an eye out for such extreme levels if the dollar continues to rally. So I wouldn't be in a hurry to accumulate this thing right now. And hopefully, because I know we talked about this one a while back, and hopefully when it was pushing these highs, hopefully you got out of something if you own some of this, right? Because that's what you want to do. You want to try to distribute, when it's pushing some kind of high, even if you take 20% off the table, right? Even if you take a small amount, even if you took 10% off the table, that's 10% that you can now buy back, at a better price. So I would just hold off. I think in this situation, it might be better to maybe take some very small bites, and then when the structure changes, put on, what you were going to put on anyway. If that makes sense. Okay, thanks for asking. Hey, Ying, from Barcelona, mucho gusto. Should I look into Euro Stoxx 50 as European stock market index? Well, okay, so Euro Stoxx 50 is probably going to be similar to the S&P. Let's see if I could pull up that index. Probably going to be similar to like the S&P or the Dow. Let's see here. Can I get Euro Stoxx 50? Let's see. Am I spelling that wrong? Let me see here. Euro Stoxx. Let me just type in stocks with 2 X's. Stocks. There it is. Okay, so yeah, this is a general market, right? An index. So I would treat this like the S&P and NASDAQ. And look, it's got a similar move, similar type of situation. So if you want to trade something like this, obviously you could trade the CFD, and even something like the NASDAQ or S&P can even serve as a guide. As far as support and resistance goes, look at the failed low off of this area right here, right? So that would have been a good area the other day, right? After the fact, it's clear, but that would be an area to be looking for longs. Just like someone had asked the other day, if this would be a good place to sell, I definitely said no, okay? Because you don't want to sell into a low, because this is what can happen, right? Especially in a general trend that's been strong for such a long time. Anyway, so yeah, if you want to, this thing is definitely a good swing trade instrument. At this moment, though, there's nothing to do here. There's no sell signal. It's a potential lower high. So what you have to do, what I would do in this situation, is wait for the higher low or the double bottom, kind of like Bitcoin, because this thing can establish another lower high. Same idea as the NASDAQ. It's possible. Now, lower highs and lower lows, that may sound like a bearish trend, but the trend is not bearish. The trend is really this broader structure here, right? That's the trend. And that trend is bullish. So what we're looking at is a corrective move, a corrective structure, and at some point that structure is going to change, like Bitcoin, right? When Bitcoin double bottomed at 40K, if you can catch something like that, you're in from a good price. And if the structure changes after such a move, that's a nice little swing trade right there, okay? That can possibly test a new high over the coming months or maybe weeks. So yeah, not a bad idea. Thanks for asking about it. Definitely a good one, like CFD. That would definitely be a good CFD instrument. Can you please take a look at Spotify? Okay, Spot. Let's take a look. So Spotify, I don't even know what to make as far as the S&P correlation. I don't even know what to make of this thing, but let's just take a look at this from just its range. You have a range low over here. You have a range high in here somewhere. The general trend on this stock is, generally bullish, right? We have the higher low, higher high. It failed to go higher up in here. Since then, it's corrected a bit and it's been range bound. Now, some people can argue that this is a broad head and shoulders. That's possible, but I wouldn't get opinionated by such a pattern. These patterns can be random, okay? Especially in light of a generally a stronger trend. Now, with that being said, the general trend is bullish. This more short-term trend, if you want to call it, or lack of trend, is consolidation or range bound, and you're in the middle of it, right? You're right in the middle. You're right at that midpoint. Yes, you can argue that there's a higher low over here, but the thing is, it's not coming from there's no trend right now. So the higher low in this context doesn't mean anything. So I would wait, because this is a highly random area. I would wait for another test of range low. That's what I would wait for. Something like that would give you a much higher probability outcome if you're looking for longs, in a reversal in such an area. Otherwise, if this thing wants to work its way higher, sure, you go back to the range high, but you have to take a lot of risk. And people may start selling much earlier than the range high, especially with the way the NASDAQ is looking right now, right? The NASDAQ may be putting in a lower high, and if the NASDAQ sells off again, this thing may feel the pain, right? So I don't think it's worthwhile right now. When you look at these NASDAQ stocks, you have to always look at them in light of where the NASDAQ is. And while people say, oh, NASDAQ's strong, yeah, but the level of the NASDAQ is not an attractive level. So what happens if the NASDAQ pulls back, right? And this thing is in a vulnerable spot. It's in a 50-50 area, highly random. I'd rather wait for support. So thanks for asking about Spotify. Okay, let me see what else we got here. Douglas, I've been hearing the reason altcoins have been stagnant in dollar terms because a lot of people have been selling altcoins in order to chase the rise in Bitcoin. So Douglas, that's very possible. Here, let's pull up something like AVA USDT, right? Here's a good example of one. People ask me about AVA all the time. Now look at this thing. Bitcoin pushed up nicely, and look, this thing is sagging. What is this all about? Okay, and look at where it's sagging from, resistance area. So it's possible that people might be selling their altcoins to chase Bitcoin, or maybe just like how the euro against the dollar works, right? If the dollar moves higher than the euro faster, obviously the euro against the dollar is going to go lower. So the pair would go lower. Maybe something like that is going on here as well, right? Bitcoin rise was so swift relative to these things that, the higher price of Bitcoin makes these things cheaper, right? So that may be all the same thing. I don't get too wrapped up in those relationships because they're always changing. And I need to keep things simple, right? More complexity is not good, especially when it comes to making these type of decisions. All right, so thanks for mentioning that. Elizabeth, Ethereum, let's take a look. Ethereum, man, I think she asked that like an hour ago. Let me see something here. Hold on, do I have the right, let me pull up the right, I have Ethereum with levels on it. Let me just go to my Ethereum, is that the one? Okay, that's the one, I got some levels on this. All right, so now look, Ethereum always gets out of hand. All right, I think there's just too much hype in this thing, and everyone gets very excited about Ethereum. Ethereum looks a lot better than Bitcoin right now. Bitcoin has the red candle developing. Ethereum does not. Now, that's okay, but if that red candle sticks on Bitcoin, this not going anywhere. That's what you have to realize. Look at the resistance level you're at with Ethereum. What price is this? 36.75. So not a good place to be buying. Great place to be selling or distributing risk or locking in some profit. Now again, if you're a long-term investor, this would be a good place to take a little off the table, right? But the general structure is changing, right? This structure is definitely back to bullish, right? You took out this resistance over here, this little minor resistance. We're testing this one now, and until it rejects, right, I have to assume that it will continue through until it rejects, but I'm not going to take risk here, okay? It's not worth the risk. So what I would like to see out of Ethereum, very similar to what I would like to see out of Bitcoin. Pull back. What price would be an attractive place for Ethereum? This price right here. 30, basically, what, 31.50? What is this high over here? Yeah, 31.50 area, something like that. That would be a good spot for a pullback, and that would probably coincide with Bitcoin testing 50K. Now, what if Bitcoin goes to 57K, right, or 58K? Then you're probably going to see Ethereum push higher and test this high over here. But like I said before, if you're buying this thing now, and you're like, oh yeah, look, I bought it. Okay, I'm not making fun of you, but I'm just saying, if someone buys this thing into this area right here, and they think, yeah, I got Ethereum, and this thing's going to go to 10,000 now, like the YouTube video told me. Right? The risk that you took in this area is not worth, because this is the risk. All of this is the risk, that range right there. In hopes, you're hoping at that point that it breaks out and does something like this, which it's a possibility, but it's a very low possibility. Not worth the risk you have to take, because if you're wrong, right, you in order to take an appropriate risk, you have to lose a ton of money, right? Because you have to give that thing enough room to pull back, and that pullback can be steep. So not worth it, right? And that's why you avoid trades like that. So I wouldn't do anything with this. Good place to get out of stuff, not a good place to get in. Thank you for asking. But something like Ethereum can be very tricky at times because it likes to do a little extra, right? It always likes to push a little extra and kind of get away from Bitcoin, but eventually Bitcoin reminds it that, where you're going, you have to follow me, right? Okay, so Simon, this guy is so immature with his impersonations. Oh, he's making fun of me? All right, I'm immature. All right, Simon, well, then go find a mature fake guru. There's plenty of them, especially on TikTok. He must have been a TikTok guy. It's probably why he got mad. Okay, anyway, Douglas, I hope you develop some you. Okay, I'm just getting to that comment now. Hey, HS, good to see you. Would you mind looking at theta? Sure, theta. I'm immature. I'm immature. Now I'm going to do impressions the whole time. No, I'm joking. Okay, so theta. Let's take a look. So what do we have here? Resistance, right? Not unlike the Bitcoin situation. Nice push off of this double bottom. This is the midpoint of the range, okay? And your range is basically like this entire area right here. I wouldn't do anything with this right now. Just like Ethereum, just like Bitcoin, what you want to see is a pullback, higher low. That would be ideal if it can deliver that, followed by some type of reversal. Like this little candle right here, I could see why that might be interesting, but what carries more weight, it's not the candle that carries any weight, it's the location. Look at this congestion that you have in this entire area. I mean, look at this. Look how much congestion there is in this area, how price gyrated around this area. So it's going to be tough, right, for this thing to clear it unless Bitcoin does something spectacular, right? So I would wait either for the higher low, that's where probability is more favorable, or the double bottom. And that's the case for Ethereum. That's the case for some of the other altcoins we looked at. So that's how we would treat something like Theta. Again, there's going to be a bunch of coins that they look promising. They look like, okay, here's the leg, here it goes. And you don't realize that you could be buying into something that looks like this, right? It looks promising, and then it just gyrates around, eventually shakes you out. So you want to wait for higher probability locations. This is not one. It's like 50-50. It's like you might as well flip a coin. All right, so thanks for asking. David, smart investor. All okay. DJ, SPY puts. Okay, so DJ, so you mentioned, now DJ is the guy that mentioned the put question the other day. So, and here's the thing, DJ, like I was saying earlier in the stream, this is a place to be thinking. Certainly thinking about them, because it's a possible lower high. But like I said before, I would wait until tomorrow, until after NFP. I'd want to see tomorrow's candle, and that candle needs to be closing red. Okay, that's what I want to see. So obviously you'd be able to open up that put position sometime before the close. But in my opinion, it's more, I don't like to use the word safer, but it's more, less risk, I guess you could say, for the market to wait for the market to confirm. Because right now, what if NFP comes out market bullish, right? And then you get another green candle that just goes right through this. Remember that nonsense in August, right? Like that kind of nonsense where it was just green after green after green after green after green, blah, blah, blah. So I would wait on something like that. But it's certainly the right thinking. All right, so thanks for mentioning. Why not? Why not? Why not? TCNNF, talking about pot stocks. I think that's a pot stock, right? TCNNF. Yeah, right. Cannabis. Okay, so before I go further on this one, let me just take a look at CGC, right? Look at CGC. The G in CGC stands for garbage. All right, let me go back to TCNNF. All right, now, much better structure than CGC. I'll give it that. You have the higher low in place. You have a higher high. It's also taken out recent resistance, right, over here. So the lower high structure situation looks like it's broken or it's out of play. That's good. You want to see that, okay? So comparatively speaking, this is definitely a better pot stock compared to, the fundamental leader, CGC. So what do you do with this now? Well, you have a change in structure, and it looks like it's trying to, well, the market's closed now, so it's sort of above that, right? So I wouldn't buy this now. This would be buying the breakout. You might as well wait for some type of little corrective move. Perhaps you get a little pullback to this little support here. That would probably be ideal. Theoretically, it should give you a higher low sooner than that, which would be around, what is this, 20, what is this price here? 28.12 area, so 28 even, something like that. This thing's at 29.71. That's not too far away. Something like that, right? And if you can get some continuation from there, then you may have yourself something, a nice little swing trade on your hands. As far as investment goes, well, this would definitely be improving structure, right? So as far as small bites, you could take a small bite anywhere. just keep in mind, taking small bites here, you're almost in that resistance. So why not wait for a better price? But again, the whole point of a small bite is you can buy at any price. So the small bite has to be small enough so that if it pulls back a couple of dollars, it doesn't really affect you. All right, it's not really a big deal. And then you can add a little bit more as long as this thing is not breaking the supports. And the main support in this case would be 23. This thing needs to stay above 23. Keep in mind, it can go range bound from here. Right, this may be the top of the range. It may pull back to that 23 area, and then you have your little consolidation range low at that point, which on the bigger picture would be a double bottom, a broad, higher low double bottom. But I definitely like the broader structure on this chart. Okay, definitely makes sense, and I like the change that's occurring. So if you're going to play with a cannabis stock, this is probably the better choice. Thank you for asking about this. Shubham, inside bar works very good. Whenever I see inside bar and major support, yeah, well, I mean, if you think about Shubham, if you think about what an inside bar is, really, an inside bar is all it is a consolidation on a smaller time frame, right? And you're just seeing it on a larger time frame because I'm looking at the daily chart. But it's really just a range, and you're seeing a range breakout. That's really what an inside bar is. So thanks for mentioning. Why you should be telling me, DJ, you'll be... Well, yeah, DJ, well, if you want me to lie to you, I can lie and I'll probably get a lot more followers. Anton, for me, it looks strange that alts mostly don't keep up with BTC. It makes me think that the market is surprised. Okay, not really believing in new highs. So Anton, I mean, that's an interesting thought, but it's just, I know it's just human nature to try to pin like a reason, like why I think this, why I think that. But after everything is said and done, you really just have to focus on just what is, right? So I don't question why. If the altcoins don't want to follow Bitcoin, like in this case, I'll pull up another one that I was looking at. What was it? There was another one. I can't remember it now. There's a bunch of them out there. Was it XMR? No, I don't think it was XMR. It was XRP, I think it was. Is it XRP? Well, you see, it's kind of hesitating, right? It's not horrible. There's certainly worse coins out there. But my point is, you let the market tell you what to think, right? Don't do it the other way around. Like, don't say, I think the market this, I think the market that, because it's really what the reality of the market is, whatever the price is doing. So that's why if the alts they want to do something different this time, okay, I accept it. I don't ask why. I don't care. I just recognize that they're not acting as they have previously, like consistently. Typically, Bitcoin goes higher, the altcoins follow. Bitcoin goes higher, altcoins don't follow. That's a change in the behavior, and that's all I need to know, right? That means that if I view that as relative weakness, that means I'm not going to be in a hurry to get into these altcoins because they're relatively weak. And they're all at resistance levels. Another one at a resistance level. Look at this, right? Resistance levels. So that alone turns me off. The fact that they're fooling around at resistance levels. And Bitcoin has made its move, and these things are, just kind of hesitating, right? So we have to see how Bitcoin plays out over the next few days. How am I doing with time here? Okay, not too bad. Let me just say this, a couple of things before I wrap this up. If you like the video, please press the like button. Also, if you can subscribe to the channel, I guess that would be helpful as well. So every time I do one of these videos, you can get a notification. So let me leave you with this as far as Bitcoin goes. Don't react. Again, people reacting to stuff. Don't get stuck on an opinion. Just you have to look at what's going on at the moment. You have to look at it, but you have to look ahead. And if you notice on my charts, I don't have any oscillators. I don't have any moving averages. I don't have anything on my charts except lines and boxes that I draw. Okay? Less is more in this game. So the more if you can make a decision on less information, that's better, because more is not better. All these oscillators and all these other tools and this and that, keep something in mind. They offer no advantage. I say this all the time, but it's true. there's no specific advantage. So the outcome, if you have, whether you have one oscillator on your chart, whether you have 10 oscillators, whatever, the outcome is still the same. It's random. It's 50%. So as a retail trader then, how do you come out ahead? Well, the focus should not be on the win rate. That's what everyone focuses on. That's why, if I'm going to be a fake guru and I'm going to make a video, I'm at 80% win rate. My 5-minute strategy, 80% win rate, guaranteed, blah, blah, blah. You'll be able to retire in a week, right? Nonsense. But that gets views. So everyone wants to hear a good win rate. It's nonsense. Anyone that has that type of win rate is not going to share it. But many strategies don't. The focus should be on preserving your capital and managing the risk, right? The risk is really the key part of the whole thing. And risk is not fun. It's not sexy. It's not exciting. No one wants to hear about risk, but they want to see reward. Focus on the risk. Focus on the levels. The chart can help us do two things, and that is really determine the risk and show us the levels in the context of some kind of structure. If you stick to the basic tenets of technical analysis, which are markets trend, price is a discounting mechanism, and history repeats itself, okay? Those three tenets are what make technical analysis worthwhile. If those truths were not true, then charts would be a complete waste of time at every level. So at the retail level, we're very limited as far as what kind of information we have. So we have to select our information very carefully. You can't just grasp at anything. Fundamental news come out or some other nonsense comes out and you apply your logic to it and say, well, I know what this means. It's all irrelevant. It's nonsense. Your outcome will still be random. So we have to accept that, and we have to accept that there are pieces of information that you can grab and put together which will give you a sense of context. Okay? All these fakes that are out there, none of them talk about this. I watch plenty of their videos. All right? They're all focused on, I'm going to show you the magical secret strategy that will make you millions, right? That's what they're all focused on, the strategy. Meanwhile, if you have a strong sense of context, you'll be able to refine that strategy and actually figure out where your probability of that strategy working in your favor is greater, right? And there are unique situations when that occurs. Now, a quick example, because I talked about it throughout my whole video, like I do on every video, a pullback to 50K on Bitcoin would be such an area. It's a location. Now, keep in mind, if Bitcoin pulls back to 50K, what do you think you're going to see on the YouTube streams, on the YouTube videos, on TradingView, anywhere else, any other kind of public forum? What do you think you're going to see if Bitcoin pulls back to 50K? The majority of the content you're going to see, Bitcoin pulling back to 20K, Bitcoin's going to zero, Bitcoin is obsolete, right? All this nonsense. Meanwhile, or Bitcoin short, I'm short Bitcoin, blah, blah, blah. Meanwhile, you should be thinking long, okay? You should be thinking long, and that's where, if you have that type of context, because you're prepared for your level, now, when your strategy generates a buy signal in that area, now things are lined up, right? Now things make a lot more sense. Of course, the next factor from the next component would be your risk and your reward. But anyway, so I just wanted to leave you with that, again, because you have to have a decision-making routine defined like this. So every time you're going to make a decision, you should be able to run through your routine. And that's what eventually becomes your trading strategy. All right? That strategy is personal. It's yours. You don't really share that with people, okay? Because if you ask any professional, there are some professionals on YouTube. They're rare, but there are a couple. They don't specifically share their strategy because they can't, right? Because if there is an advantage, they don't want to give that advantage away. You can't give it away because if everyone starts using it, then it's no longer an advantage, right? So you have to be able to basically find or create your own advantage. And advantages are going to be temporary. So you have to be able to, have some sort of set of rules that allow you to think in a way that's more natural to the market, allows you to manage risk effectively, right? That's the most important part. And then you have a strategy that helps you filter out signals, right? And that's what gives you that's how you find the market opportunities. And even then, when you have all that together, you're still not going to have 100%, right? Nothing is 100%. That's why risk control is really the main thing. All right, so I'm going to leave you with that. Let me see here before I wrap this up. From Riga, hey Latvia, welcome. Okay, now Zolta, I got to wrap this up. I'm sorry, but come back to my next stream and I'll ask me again, or come to the free chat room or something. Elizabeth, as you're thinking about your promotion game, please consider. Oh yeah, so Elizabeth, yeah, it's taking me some time. My resources are limited when it comes to stuff like that because I got just a lot of stuff on my plate. But when I have some stuff, don't worry, you'll be the first to know. Definitely people here that come to my channel will be the first to know. I guess you're going to get much more views than usual with this streams. Well, Anton, if you notice, it's not really clickbait because I put Bitcoin 200K question mark, right? Question mark, and I meant that to be something like, 200K, like seriously? Because I saw another video that said Bitcoin 200K without the question mark. So, I don't know, but we'll see. I didn't mean it to be clickbait. I'm not trying to bait people to watch the video. I am trying to just give them reasonable and realistic views. And if they read the first part of the description, right, the first part of the description area, it says right in there, not likely. So anyway, thanks for mentioning. Okay, no problem. Yes, Schwartz Bond from Romania. I'm glad you said hello today. I have quite a few Romanians in here watching me. And yes, I know, my family in Romania. Definitely, thank you. Thank you for stopping by and supporting. All right, everyone, so I'm going to wrap this up. Thank you all very much for spending some time with me this Thursday afternoon. I hope you got some value out of the video. I am working on making improvements. I appreciate your patience. It's just a lot going on, and it's not easy to do, I'm sure, as you all know. So again, check me out next Monday. I should be back on here. I'm trying to figure out my TradingView situation so that I can simulcast on there as well, all right, because it's a nice community there, and I like to do that. So yeah, all right, so watch for that. Anyway, thank you all very much. Wherever you are in the world, have a great day or have a great evening or, whatever. And thank you so much for watching.